Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the silver outlook still remains bearish, and as you can see from technical implications is the fact that the stochastic is still holding very strongly to the downside, with the MACD histogram now coming through and supporting the target towards $16.60. For those that are trading short over the last few days, it is recommended that we do lower stop losses in case we do get a short snap to the upside, with the resistance coming in now around $17.10 to $17.45. However, overall, I still feel the market will remain to a bearish sentiment until reaching its target of $16.60 and reassess from there. Well, the yellow precious metal remains in negative territory, with the downside pressure likely to continue on. It is still viewed the market will look towards the 1,248 objective, and especially with the technical implications like silver still hold negative. Although we do have a long-legged doji, which is a slight indication of indecisiveness to the sell-off. However, I still expect to see the market continue on, with the initial target holding to 62 and then down towards 56 to 1248. Any advances on the top side now sees a cap around 1,269 to 75. Well, the Australian dollar did attempt to try and restore its bullish sentiment overnight. However, the market did reject from that 75.65 resistance. The NAB business confidence yesterday came in lower than expected, from 13 to 7. With today's release of Chinese industrial production figures and also fixed asset investment at 12 noon today, could see the Australian dollar potentially weaken further, with the immediate target coming in now at 75.15, with the downside beneath there at 74.70, also known as a trigger level. Now a break beneath there will give further exposure to the downside and bring in a target of 73.85. Well, the market pretty much trading sideways over the last 3 days since the rejection from the multi-month highs around 112.80 figure. Although my view is still holding towards that 111.70 and has weakened since the previous challenge, we could see another 24-hour consolidation, purely for the fact is that the market is now waiting for the Federal Reserve's latest policy meeting. The market is expected to see a quarter-point hike, which would be the second increase in 2017. With the market now priced in at 90%, does look for the 25 basis point hike. What will be interesting is a statement from Janet Yellen, and she would probably most look to push away from the next hike in the near term. However, it would be a very big shock if the Fed did not move tomorrow. So still keep a very close watch on euro, as I expect, as I say, a move down to 111.70, with any advances to fail towards the top side. Well, the dollar yen still attempting to try and recover its bullish bias. However, you can see from the current price action it is struggling. Now it's broken above the 110 handle. So looking to this week, as I mentioned before, the Federal Reserve's latest policy meeting is currently forecasted as a quarter-point hike. Afterwards, the Federal Reserve Chairwoman Janet Yellen, who uses her press conference, will try and push back hard on the market skepticism about the need for another rate hike this year. So what do we expect for dollar yen? Well, at the moment, I still feel that the market will be pressured to the downside as the saga continues on with the ex-FBI Director James Comey. Also, the other views ahead is that if the Trump administration does continue to keep being under pressure, then we could see a pullback towards a support of 109.75 to 55, and then down towards 108.80, where I see the market recovering. Keeping a close watch on the stochastic and also the MACD. I am a little bit cautious to the bear move, because I still feel that while this pattern slowly increases, could see a very strong challenge eventually to the upside and take out that 110.60 and move on towards the 111 region. Well, the Great British Pound remains under pressure following the recent UK election, with the data released overnight may now build a bearish case to further losses in the coming session. The overnight UK Consumer Price Index, or the CPI, came in higher from the estimate of 2.7 to 2.9, its highest point recorded since April 2012. So if the pattern holds to this downward move, I'm looking for further challenges towards the support, coming in at 126.80 and then lower down towards 126.35, with the objective holding towards the 125.50 region. Any advances on the day should find resistance around 127.70. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day ahead.